And in last month, Pakistan faced devastating floods. As we are in negotiations with the IMF, and we have already making projections to reduce it to from 4.5% to 4%. Utility prices are going to make a major contribution in inflationary pressure. Primary surplus, and Pakistan has envisaged a primary surplus of 2.4% of GDP for this financial year. Because, Pakistan's power distribution companies are facing losses. For instance, so in next few days, they are going to finalize these talks, and as a result...
Assalamu alaikum, sir.
Walaikum assalam.
Welcome to All of You Business. Thank you for joining us. So, sir, I'll begin the podcast with the first question, and that is Pakistan's headline inflation clocked in at 5.6% on year-on-year basis in September 2025. So, sir, what should we expect from now on?
Bismillah ar-Rahman ar-Rahim. Thank you very much for having me. Actually, in Pakistan, inflation is a supply-side phenomenon. All around the world, it is considered that it is the demand-side push which resulted into surge in inflation. But in Pakistan, we have seen in recent past when the inflation touched the peak of 38% month-on-month basis. And from last 12 months, we have seen reduction in inflationary pressure, especially the headline inflation, because of which the policy rate, which were once peaked to 22%, was reduced to 11%. But in last 3 or 4 months period, or more than that, we have seen that the policy rate was kept at 11%. And in last month, Pakistan faced devastating floods, because of which inflation started picking up, inflationary rate started picking up. And there are 3 to 4 factors which played a key role. And first of all is the supply side constraints. And we have seen that Punjab is the food basket of this country. And the major supplies of food commodities disrupted, because of which Pakistan's GDP growth on account of agriculture sector was projected to achieve 4.5% growth for the current financial year. And now, as we are in negotiations with the IMF, and we have already making projections to reduce it to from 4.5% to 4%. So the supply side constraints and the commodities, agriculture commodities, is one of the major factor for witnessing this kind of increase. The second major factor is the stability in exchange rate. We have seen that the exchange rate remained stable from last 1 year, and it played an important role to keep inflation within the envisaged limits. And another factor is the utility prices. Utility prices are going to make a major contribution in inflationary pressure. Another important aspect that one day ahead, Ministry of Finance made projection that in September, the inflation, the CPI inflation will be hovering around 3.5% to 4.5%. But we have seen that it clocked to the 5.6%. So these factors of supply side disruptions played a havoc. And we have seen that the prices of basic vegetables, for instance, tomato, for instance, onion, we have seen that we have witnessed 40 to 50% increase in its prices, and that played a major role to witness a surge in CPI-based inflation. For this financial year, we can easily project that this inflation, which at the start of the financial year was invested at 5 to 7%, it might remain in the range of 7 and 7.5% for the whole financial year because of disruptions on the supply side and major disruptions in the commodity sector.
And sir, I believe floods have been the factor causing this.
Of course, because we have seen that the food prices have witnessed a surge, and I have cited examples of tomato and onions prices, which have witnessed in the range of 40 to 50% increase in the retail market, and that played a major role to witness a surge in inflation.
Sir, Finance Minister Muhammad Aurangzeb recently said that talks with IMF are going in the right direction. So I would like to ask you, as an expert, what do you think the right direction means in the broader picture, and what should we be ready as a nation regarding the policies of IMF, given the fact that IMF raised lots of questions and raised concerns over lots of numbers, for example, the FBR's tax numbers. So, sir, what are your thoughts on it?
Actually, IMF major issue is to restrict the balance of payment balance of payment crisis, as well as the fiscal deficit. And their primary objective is to keep primary surplus. And Pakistan has envisaged a primary surplus of 2.4% of GDP for this financial year. If we analyze the situation remained in the first quarter, we have seen that the FBR faced a shortfall close to 200 billion rupees. FBR has envisaged a target of 3.023 trillion, and FBR's own target was 3083 trillion. So, keeping in view the performance of the FBR, there were assumptions that it might result into any kind of additional taxation measures. Yesterday, Finance Minister made it clear and ruled out any possibility of any mini budget. It means that government of Pakistan intends to reduce its expenditures. It is yet to see that how they are going to reduce a slash down expenditure side. For instance, they might reduce the non-development expenditures, but possibility is that there are two things are going to happen. One is Pakistan is going to reduce the public sector development program, for which we have invested 1 trillion rupees for the current financial year. And the second major thing is going to happen, that how we are going to divert the financial resources towards the flood affected areas. These are the two major issues which will be finalized during the ongoing negotiations with the IMF. IMF review mission is currently in Islamabad, and they are going to stay till the next week. Probably they will conclude these review talks on till October 8. So in next few days, they are going to finalize these talks. And as a result, if Pakistan and IMF are able to strike a staff level agreement, it will result into release of third tranche under the extended fund facility to the tune of $1 billion, and $400 million are going to be released as the first tranche of the RSF, which IMF provided to combat the climate resilience and sustainability program under the RSF. So Pakistan is expecting around $1.4 to $1.5 billion by the next month, provided with the approval of the IMF Executive Board.
And sir, if I'm not wrong, the circular debt deadline has also been shared by IMF, and I believe it's 2029, if I'm not wrong. Sir, what are your thoughts on it? How do you think we'll be able to do it?
Actually, government of Pakistan has cleared more than 1.2 trillion rupees to raise the circular debt. And we have raised the stocks. There are two things in the circular debt. One is the stocks, another one is the flow. This circular debt and this monster cannot be raised in totality without curtailing the inflows or flows of the circular debt.
Okay.
And when it will happen, when the generation cost and the cost recovery will be minimized, or Pakistan will be able to collect 100% revenues on account of electricity bills. Because, Pakistan's power distribution companies are facing losses. For instance, in the last 6 months or 1 year period, they have faced more than 350 billion rupees losses. And earlier, in the last year, these losses were around 600 billion rupees. So we will have to curtail the inflows which are piling up in shape of the circular debt. Until and unless we are able to erase this, we will not be able to overcome this monster of the circular debt.
Sir, while talking about all the numbers, Pakistan has successfully repaid the 500 million euro bond that matured on September 30. Sir, what should we look forward to next?
Actually, yesterday, Finance Minister has attributed this as a non-event. If I remind you, almost 1.5 years back, everyone was talking that Pakistan is going to face a default. Now it has become a routine event that Pakistan's foreign exchange reserves held by the State Bank of Pakistan are around $14 billion, and we can easily repay the Eurobond of 500 million rupees, $500 million. So the next major installment will be coming due in April 2026, when Pakistan will have to repay another maturity of the Eurobond to the tune of $1.3 billion. And Pakistan will be able to repay this major installment without having any problem. And there are certain options under consideration. For instance, Pakistan is going to launch Panda Bond by end of November. And the first prescription will be $250 million. In totality, Pakistan intends to launch $1 billion, but it will be done in a phased manner. Its second installment is expected to be done in April. This Panda Bond is going to be launched to attract the Chinese market. And if Fed reserves is going to decrease its policy rate, and Pakistan is going to improve its credit rating by 1 notch, then it is also a possibility under consideration that Pakistan is going to reappear in the international capital market for launching a Eurobond by end of the quarter of this financial year, or probably in the first quarter of the next financial year.
Sir, once again, fingers crossed.
Of course, fingers crossed, but Pakistan is able to attract the capital market investors. And it's very important to reappear on the radar screen of the international investors.
Thank you so much, sir.
Thank you.